You just signed the paperwork for a car you can definitely afford, and you felt responsible doing it. Proud, even, like an adult who makes smart decisions. But there's this tiny voice in the back of your mind calculating something you don't want to look at directly. $537 a month, 72 months. You did the math once, got uncomfortable with the number, and decided to think about it as monthly payments instead. Because $537 feels manageable. It's less than rent. It's less than what some people spend on restaurants. You can handle $537. And here's the thing. You can. That's not the problem. 3 months in, you stop noticing the payment. It's just part of your budget now, another line item that auto-drafts on the 15th. You arrange your entire financial life around that number. You say no to the weekend trip because you've got the car payment coming. You skip contributing to your IRA this month because the car payment hit the same week as your insurance. You pick up an extra shift, take on a side project, optimize your grocery spending, all to make room for a number you agreed to 6 years ago. You tell yourself it's fine because everyone has a car payment. You'd feel weird not having one at this point, like something would be missing from your monthly obligations. And anyway, you needed the car. How else were you supposed to get to work? How else were you supposed to maintain the life you're trying to build? But sometimes, late at night, you run the full calculation. $537 times 72 months. $38,664 for a car that was $32,000. You paid almost $7,000 in interest for the privilege of not waiting. And that's just this car. You had a payment before this one. You'll probably have another one after. 12 years of payments so far. You're 34 years old and you've never not had a car payment. The car itself loses value every single month while you're paying for it. You're paying interest on a depreciating asset. You know this. Everybody knows this. But you do it anyway because the alternative, saving up and paying cash, feels impossible. Irresponsible even. Who has $35,000 just sitting around? Meanwhile, your coworker bought a used car for $8,000 3 years ago. Same commute, same parking lot. You spend $6,444 a year on car payments. He spends maybe $1,000 a year on maintenance. You told yourself your car is more reliable, safer, better for your image. But is it $5,444 a year better? That's not a one-time difference. That's annual. That's permanent. That's the cost of the story you tell yourself about what you deserve. Here's what's really happening, and nobody wants to say it this clearly. Your car payment isn't about transportation. It's about identity maintenance. It's about signaling to yourself and everyone else that you're doing okay, that you're not struggling, that you're the kind of person who drives a car from this decade with that logo on the front. You're not paying for the car, you're paying for the feeling the car gives you. And the financial system knows this, the dealer knows this. That's why they don't show you the total price. They show you the monthly payment. Can you do $537 a month? Not can you spend $38,664 on a car. Because one question gets a yes and the other gets a pause. One question feels like budgeting and the other feels like consequences. They stretch the loans from 48 months to 60 to 72 to 84. Not because cars got more expensive. Well, they did, but that's not why. They stretched the loans because people can't afford the payments otherwise. They've engineered a system where you're underwater on your car loan for the first 4 years, but you don't feel it because the payment fits your budget. You walked into that dealership thinking about monthly payments, and you walked out having agreed to 6 years of reduced financial options. 6 years of I can't because of the car payment. 6 years of arranging your entire cash flow around an asset that's worth less every day. But here's what nobody tells you about money, and this is the part that changes everything. Every single dollar you commit to a payment is a dollar that stops working for you and starts working for someone else. That $537 isn't just leaving your account. It's leaving your future. Because money isn't actually about math. It's about time and options and the life you're allowed to live. Let me show you what I mean. Take that $537 a month. Now imagine you didn't have a car payment. Imagine you bought an $8,000 car in cash and invested that $537 every single month instead. Not in some risky stock or crypto scheme. In a basic index fund averaging 10% annually, which is just the stock market doing what it's done for decades. After 6 years, when your car loan would have been paid off, you'd have $50,000. Not $0 and a car worth $12,000. You'd have $50,000 in investments and a car worth maybe $4,000. That's a $38,000 difference in net worth from one decision. But you're not going to stop at 6 years. You're going to get another car payment, and another. So let's say you keep this pattern going, car payment after car payment for the next 30 years, the way most people do. That's $537 a month for 30 years going to car payments. You'll spend about $193,000 on car payments over your lifetime. And at the end, you'll own one car worth maybe $15,000. That same $537 invested monthly for 30 years at 10% returns becomes $1.1 million. Not $1.1 million in car payments, $1.1 million in investments you own and control. Your car payment isn't costing you $537 a month. It's costing you generational wealth. It's costing you the option to retire early. It's costing you the ability to take a year off and figure out what you actually want to do with your life. It's costing you the freedom to say no to the job you hate because you need the income to cover the payment. This is the trap, not the car. The pattern, the acceptance. The idea that monthly payments are just a permanent feature of adult life. And this is where everything you thought you knew breaks, because the wealthy don't do this. People with money don't have car payments, not because they pay cash for expensive cars, some do, but that's not the point. They don't have car payments because they fundamentally think about assets differently. They ask, what is this costing me in opportunity? You ask, can I afford the monthly payment? Those are not the same question. One question leads to wealth. The other leads to exactly where you are right now. The person making $60,000 a year with a $500 car payment is poorer than the person making $45,000 a year with no car payment. Not on paper, in reality. In options, in freedom. In the space between what they earn and what they keep. Wealth isn't built by earning more. It's built in the gap between what you could spend and what you actually spend. Every time you widen that gap, you create room for money to work for you instead of against you. But you can't see the gap when you're sitting in traffic in a car with ambient lighting and a premium sound system, telling yourself it was a good investment because it makes the commute bearable. Your car isn't making your life better. It's making your life more expensive. Here's the principle most people miss. Every dollar is a soldier in your financial army. When you spend a dollar, you're sending that soldier to war. When you invest a dollar, you're training that soldier to recruit more soldiers. Your car payment is sending 537 soldiers to their death every single month, and you're calling it responsibility. The people who build wealth treat every dollar like it has a job. Not a budget category, a job, and that job is to either purchase freedom or create more dollars. That's it. Those are the only two jobs. Your car payment does neither. It purchases temporary comfort. It creates ongoing obligation. You want to know what financial freedom actually means? It means your money stops being a management problem and starts being a deployment strategy. It means you stop asking, what can I afford, and start asking, what does this cost me in time? Because every purchase is a time purchase. You're not buying a car. You're buying 72 months of restricted options. You're buying the certainty that you cannot make a dramatic life change for 6 years without figuring out how to cover $537 a month. That's not freedom. That's a subscription to your own life. And the interesting thing about people who actually build wealth is they all have this one moment where they stop asking, can I afford this? And start asking, what does buying this cost me in freedom? They realize that the monthly payment isn't the cost. The cost is the life they can't live because they're covering the payment. You know that feeling when you look at someone who retired at 45 and you think they got lucky. They didn't. They just refused to have a car payment. They refused to finance the boat. They refused to upgrade the house every time they got a raise. They lived in the gap and let the gap compound. Your lifestyle is someone else's marketing budget working. Every car commercial, every social media post of someone in a new vehicle, every conversation where people casually mention their lease. That's all designed to make you feel like having a payment is normal. Expected, responsible. It's not. It's expensive. You're one job loss away from defaultment on that car, and you chose that vulnerability because you wanted the feeling of the new car smell. You wanted the temporary status boost. You wanted to not feel behind. But here's what actually happened. You locked yourself into being behind for 6 years. Minimum, every person you envy made a choice you weren't willing to make. They drove the older car, they said no to the upgrade, they felt uncomfortable at the stoplight next to the luxury sedan. They sat with the feeling of driving something less impressive. And that discomfort bought them options. Your comfort bought you obligations. 5 years from now, you'll wish you had started today. That's not inspiration, that's just math. The person who stops the pattern today and redirects those payments into investments will be unrecognizably better off than the person who keeps renewing the cycle. Not because they earned more, because they kept more. The question isn't whether car payments are bad. The question is, what is this pattern costing you over the arc of your entire life? What version of your future are you trading for the comfort of this present moment? You're not bad with money, you're just playing the wrong game. You're playing the game where you optimize monthly payments and try to afford the life that looks successful. The people who win are playing a different game entirely. They're optimizing ownership, they're building the gap, they're buying time, and time is the only asset that matters. You can make more money, you can't make more time. Every month you spend on a car payment is a month you can't get back. Every dollar you send to the bank is a dollar that will never compound in your favor. Right now, you probably owe more on your car than it's worth. You're what they call underwater on the loan. You can't even sell it and get out. You're stuck. And in 2 years, when you're tired of this car, the dealer will roll that negative equity into your next loan, making it even bigger. The trap compounds on itself. This isn't about shaming you for having a car payment. 90% of people have one. This is about showing you what that decision actually costs when you project it forward, when you multiply it across a lifetime, when you see what the alternative path looks like. The alternative is uncomfortable. It means driving something you're not proud of. It means people might notice. It means you don't get to signal success with your vehicle. It means delayed gratification. But delayed gratification isn't delaying your life. It's front-loading your future. The person driving the paid-off 2015 Honda while investing $500 a month isn't suffering. They're building escape velocity. They're creating the gap that will let them retire while you're still making payments. You know this already. That's why you're still here, 15 minutes into this. That's why that quiet voice in your head hasn't stopped calculating since the day you signed the paperwork. You knew. You just didn't want to look at it directly. So look at it now. Your car payment is stealing your future. Not dramatically, not obviously. Quietly, consistently. $537 at a time. And the cost isn't the money. The cost is the person you could have been if you weren't spending half your 30s covering a payment for an asset that loses value every single day. Nobody's coming to fix this for you. The bank isn't going to call and say, hey, this was a bad idea for you. The dealer isn't going to send a refund. Your future self isn't going to time travel back and stop you from signing. There's just you, and the choice, and the clock running on your one life. So what do you actually want? Do you want to feel successful for 6 more years? Or do you want to be free 20 years from now? Do you want the car that makes you feel like you're winning, or do you want the life where you actually win? The question isn't if you can change, it's if you will.